Evening, everybody. Hope you're all there. Hope you can all see me. I hope this is coming through. A lot of hopes. Only the second time we've done it on YouTube, and I'm never sure if I pressed the right button. But yeah, there is anybody there. Jeff's at least put evening, so that's a good sign. Thank you. Hi there, Jeff. How we doing? Cheers. Thanks, Jeff. There does seem to again be a little bit of a lag. So what I've done is last week we had it just on normal latency. I think there's probably about a 15 to 20 second lag. I've put it just on low latency. That should bring the lag down, but it might affect the quality. So perhaps a little bit later on we'll get a bit of feedback on how much of a lag we think it is versus how much the quality is. I can also take it to extra low, but I just didn't want to do that just yet. Just one other thing before we get started. So hopefully, fingers crossed, I've cracked how we can talk to each other. It's still going to involve people using Discord, so I'm just looking at my other screen. I'm just going to join the voice chat now. But in theory, I have connected Discord to YouTube. So if anyone does have a question, they jump into the voice channel on the RT group and speak to me. That should then hopefully also come through on come through the sort of the YouTube stream, rather than sort of there being any concern over, I don't know, it coming through my microphone and my speakers, and then it just sort of like bouncing back and creating a bit of a problem. Jamie, I agree with you that I do actually have pretty crap internet, unfortunately. So that's the problem. Although I pay for the best, I'm a million miles away from where the BT line actually starts. So it doesn't matter what I ask my provider to give me, I'm just restricted by the lines. But anyway, that's where that is. What we'll do is we'll jump in, we'll go through quite a bit to cover tonight. Obviously, there's a bit of news. In terms of research, going to cover a website that I'm really impressed with, and we're going to just very briefly talk on one project that someone asked me about a couple of hours beforehand, so I haven't had enough time to do a deep dive in that, so that will be the research coin for next week. Then have a look at AI. I mean, it's been all over crypto recently. I know we spoke about that a little bit last week, but we will go over that again. We'll then obviously have a look at a lot of different aspects in Bitcoin, bullish scenarios, bearish scenarios, have a look at some smaller time frames, other altcoins that are out there, and obviously there's questions throughout. So let us commence. I just need to bear with me. Right, as you can see on the chart, I'm just going to jump straight in. There was no predetermined questions that were asked, so nothing really to cover there. We don't really need to go into this chart at the moment either. So what we'll do is we'll just jump straight into the news. And instead of me going through the articles in a lot more detail, I'm just going to, there's so many things that happened this week. I'm just going to sort of briefly go over a couple of the key points and everything, post the articles as I usually do, and you can read those to your heart's content if that's what you like. But we discussed a couple of weeks ago about the collapse of Genesis, they being owned by DCG, and what the implication of that was going to be. Well, Genesis, Gemini, DCG, there's a few articles about them in a moment, have all been meeting, and they've now actually come to an agreement. Well, should I say DCG and Genesis come to agreement with the key group of creditors, one of those being Gemini, to restructure that payment. So it's kind of a positive step forward. That's it in terms of the speed at which that's happened. That's great. There's no timeline on when that's going to come out, and there's no total detail that's been available to the public at the moment as to how that agreement and how those creditors are going to be paid and what that looks like. But the fact of the matter is that both sides of I say both sides, there's going to obviously be more than one, but all parties seem to be in agreement that an agreement has been made. So a positive step forward there. Going on, the Genesis creditors expected 80% recovery under the restructuring plan. So as I said, some of it is starting to be drip fed through, which given where they are, that's pretty impressive that you're going to get 80% of it back. Again, expected to. I don't like it when I see that word, because it just makes me a little nervous that there wasn't that big a commitment for it. But we shall just have to wait and see on one. That one comes there. And the other sort of story that comes from this, the Gemini, I kind of already spoke about. So that's that was the Gemini Earn. So that was the people that were using their tokens, staking those, or loaning them out through the Winklevi platform, which was quite vocal. And obviously there was quite a bit of a falling out at the beginning of the year between Barry and Cameron. But again, I didn't bother pointing out, but they seem to have made up with each other. So yeah. However, I don't know, why have I not got it? I think it's here. No, this is not that one. I must have not brought this article up. One of the things, let me just sort of start talking and then I'll try and find it. One of the things I was interested about, though, is it has been reported that DCG are now looking to sell some of their assets within Grayscale. And that came out exactly the same day, so I am assuming that has it's got something to do with how they're going to sort of help fund some of this recoveries. I don't know where the article is. I thought you can see how many articles I found to talk about this week, which is why I am skipping through them. But obviously I didn't save it. But what I'll do is I will dig that up. So the fact of the matter is that obviously Grayscale has a significant amount of BTC within its possession, which obviously it turns into GBTC. And so it'll be interesting to see when they... here it is. Is this it? No, it's not. Okay. Right, doesn't matter. So it'll be interesting to see when they start selling that and what that may do and how much of it they need to sell. So I'm not automatically saying that's it. The bull run's over now. It's going to be a dump. But the fact that they have come out and said that is how they're going to at least fund some of it is interesting, to say the least. Moving on to another week, another story about Sam Bankman-Fried. So a lot of you have seen that he's been using a social media platform called Signal to sort of communicate his thoughts, which was supposedly in breach of his bail requirements, because he has to have his phone and any social media and all that kind of stuff tracked, and there was thoughts that this potentially wasn't. And there has also now been rumours that he's been sending out confidential anonymous letters or emails to people, sort of suggesting they're not connected in a while but would be good to catch up, which could be seen as him trying to worm his way into curry favour. So the lawyers weren't particularly happy about that. They've gone to court and they've come to some sort of agreement now, both sets of lawyers, as to what he can and can't do. And so I'll just read this out. Two sides of the courts have modified the bail conditions to allow him to use various messaging apps. So he can now use FaceTime, Zoom, iMessage, SMS text, emails, Facebook Messenger, and WhatsApp. I was about to say the reason he can use all of those ones, and then I mentioned WhatsApp, was because they are traceable and trackable, so that's fine. With WhatsApp, obviously it's peer-to-peer encryption. However, he has to have monitoring software installed on any phone that he's going to use. So, whether or not that's going to stop him from sort of continuing to ban the drum, we'll just have to wait and see. But it certainly looks like he is restricted from using social media platforms. There isn't any I can see that are mentioned there. And it goes on to say that he can't use Signal anymore either. Some of you might have seen that Binance has now suspended USD withdrawals. That's tomorrow. They announced it, yesterday. And then as of tomorrow, they're going to suspend USD withdrawals. There's no real explanation as to why they've done that. Matter of fact, Binance was very quick to stress that was like less than 0.5% of their withdrawals with what they were suspending, so it shouldn't massively impact anything. There is potential that it could be aligned to the SWIFT payments or movements of funds. There's also talk that it could be with their banking partner, Signature Bank, so maybe there's that there. Simon alluded to an article that I talked about in Discord, with the Congress calling an emergency hearing next week to talk about, the 2022 crypto winter and just the amount of fraudulent activity that took place. Maybe there's a slight heads up on what that's going to be about, and so Binance are jumping the gun to try and correct it. We don't know at the moment. It was a weird play from Binance, because I remember getting an email sort of about something happening on the 6th, probably 3 or 4 weeks ago. Again, it was particularly vague. Then they announced it. They really pushed it hard to say how small an impact it's going to have, and then moved on. It's a bit like, when the UK banks stopped withdrawals for a certain amount of time. Binance had to then go through some FCA compliance, and now you actually can withdraw funds back to your UK bank, assuming your bank allows that. So it may just be something as simple as that. And that, when they banned the UK banks, that certainly didn't cause a huge dip in the market or anything else. So, I think people were maybe trying to blow up a bit more Binance FUD. Talking about UK banks, it looks like I don't use NatWest, so apologies if this is old news, but it came out today. But the chief exec of NatWest has effectively said that we've taken a pretty hard line as a bank on crypto, and they are blocking retail and wealth customers from transferring into crypto assets because of volatility and the stability of the platform. So again, banks seem to be running scared, and what do? They just try and restrict everybody's access. So if that comes as a revelation to you in terms of you're a NatWest bank account holder and you actively use that as an on and off ramp, you may have to start looking for another bank. I find it kind of interesting that article dropped the same day that the Bank of England and the Chancellor of the Exchequer started talking about CBDCs and, effectively digital currency. And yet the banks are still squirming about cryptocurrency. But that's not a narrative that is particularly new, and it's certainly not a narrative that I think will go away anytime soon. I think they will just fight it and fight it and fight it, whether that is because they're positioning themselves or they just don't want to particularly lose customers. They'll put it under the caveat of, safety for customer funds. But we all know it's not. You can send £100,000 to your Skybet account if you want, no questions asked. So it's not like they're trying to stop us from being reckless with our own funds. I think that will continue. But interesting to say that I kind of had a little look through, and the only other bank that was kind of mentioned in here was Lloyd's. So for those of you in Lloyd's, CEO of Lloyd's said, I don't think Lloyd's Banking will want to be promoting cryptocurrencies, but we do want to make sure that if customers choose to put money into cryptocurrencies, it is as safe as can be. So perhaps Lloyd's are having a bit more of a softer touch of that. They're not going to openly promote it, but I imagine it's a bit like what I experienced with Barclays. If you have a fairly decent conversation with the fraud team or your bank manager, whatever it may be, that they'll just ensure that they pass through. And that's what I did with Barclays, and I haven't had an issue for the last 2 years, or probably 2 years plus now. So last week Nationwide Building Society said it was restricting card payments to cryptocurrency Binance. So they were the other banks that were mentioned there. Okay, moving on to the next one. I kind of started to talk about it. This only happened today. So there was a whole speech that was made by the Bank of England, which only happened a couple of hours ago. So this is about the UK moving towards a CBDC, Bitcoin, as it's currently being tagged. And what I'm going to do is, we can talk about some of the headlines, but over the next week, I'm going to sort of delve into what the paper is, what was said in the speech, and where it's going. If I think it's of actual interest, then maybe we'll spend sort of 5-10 minutes talking about it next week. But effectively, the key things that I got from this, the news articles have been drip-fed, which is rather annoying. But one of the things that I noticed straight away, and it's been reported here, is that whenever this digital pound is, they're going to put a caveat and a restriction on it. It says limited to 10K. It's actually been confirmed as anywhere between 10 to 20,000 is the the maximum supply that you'll you'll initially be allowed to hold, which again, just screams total confusion in terms of, well, how's that going to, one, be managed, and two, how they worked out. I mean, not many people get paid more than 10 grand a month. I get that, but let's just say you fell into that category that you do, you're going to get paid, a certain percentage in the digipounds, and then the rest of it's just going to be done in the previous way. It's just adding an extra layer of complication to people. Now, it may be tough, we'll have to suck it up and see, but for me, as someone who is not a fan of CBDCs, I want them to absolutely drop the ball on this. So make it confusing, add these weird little sort of restrictions in, try and be as unclear as possible and as difficult as possible, so that hopefully I'm not exactly looking for the people to rise up or anything, but it's just seen as, an ill thought out route. Sadly, I do think CBDCs will be coming in. The date that the Chancellor of the Exchequer has given, I don't think I covered it in this article. No, it might be in the next one. So here we go. And so this is where it says 20,000. But so they've got the consultation paper, and they reckon that the DigiPound could be launched by 2030. So only 7 years away. The other thing that caught my attention, and we didn't really go into it too much, is initially they're not looking at basing it on distributed ledger technology, DLT, which is obviously what the backbone of the majority of blockchains are. So, I mean, why would you want to? DLT providing that immutability in which you can't edit anything that's happened in the past. Of course, the banks don't want to go, the government don't want to go down that route, because how else will they be able to add zeros when they need to? That's something that they kind of already suggested, is that they're trying to steer it away from cryptocurrencies. Whether that's just because they don't want the association and the stink in inverted commas of cryptocurrencies clouding this consultation paper, I'm not too sure. But we shall have to wait and see. This is the consultation paper. I haven't bothered downloading it yet, but as I say, I'm going to dive into that. We'll have a look and we'll see what they've said. And if I think it's of interest, then I'll talk about it next week. So this was just another one about the hoarding and everything. I think it's almost word for word the same. The only other news article, which I found amusing, it's not anything else, was this one here. So I suppose most people know that I'm big into my NFL. Well, it's a Super Bowl weekend this weekend. What comes with the Super Bowl? It's advertisement, and adverts within the Super Bowl are usually very big and they cost an awful lot of money. It's anywhere from $6 to $8 million just for a 30-second ad. Well, because of everything that happened in 2022, crypto ads have now been banned and have been cancelled from the Super Bowl. There's just that bad a stink about it. Now, there were some interesting ads that came out last year for FTX and how great that was. Coinbase spent $8 million just sending a QR code bouncing around the screen with no words or anything. So so we're not going to see any of those. I just thought it was quite amusing that the effect of FTX and everything else that's happened now means that the likes of Coinbase, etc., will not be able to advertise at what is arguably, well, certainly the Americans think, the most watched event in the world. We know it's not. We know it's the World Cup, the Football World Cup. Okay, I think that's kind of it for the news. I just wanted to try and get through that a bit quicker than normal. So, Jamie's put, what are your thoughts on F1? Majority of sponsors are cryptos. Yeah, and they still are. I've started to see, the season starts again in March. Bybit's a big sponsor. I've already seen that they've unveiled the position and that are they on Red Bull cars? I think they are. I'm not a huge F1 fan. But FTX was a big sponsor of Mercedes. The good thing is there's so many sponsors on the car that when they took it off after the FTX debacle, I don't think anyone really noticed. I know that there are people that, sponsored directly, but Crypto.com is another a big one, and they're sort of like a main sponsor, track sponsor as well. So as I understand it, a lot of them still stand. Crypto.com went very hard during the last bull run. We've talked about the stadiums that they named and everything else. Whether or not they have to tail that back just because they don't have the funds, we'll have to wait and see. What was interesting is after the FTX debacle, CZ from Binance came out and was like, we don't waste our funds, our client funds on naming rights for stadiums and everything else. And it's probably fair. I'm sure they have small sponsorship deals around, but you don't see them sort of main sponsors on main international events. OTX is a McLaren sponsor. Yeah, you're right. So Jamie, you're obviously a big fan of F1. So we shall see where it goes. Maybe 2023 is going to be a bit quiet, not just because no one wants to be associated with crypto, but because crypto can't afford it. That's probably unfair given the start we've had to this year. Right, so that's kind of it for the news section. A lot to have gone through, and I didn't go into it in too much detail, but I'll put them all in there. And if there's anything you find interesting, then please feel free to have a look. have a quick drink. Okay, next. So this is I'm going to put this under the research category, and I really want to bring to everybody's attention this website. So this website is called Crypto Saving Experts. It just launched yesterday on Monday. It's set up by a relatively controversial character in the space. It's someone you either love or hate. If any of you are on Twitter, set up by a gentleman called That Martini Guy or Jordan. And whilst he's a permabull and he's a shiller of quite a few tokens, he's gone and set up this one-stop shop, as he's called it, website, which is completely free. And I actually think it's a really good website. I've known about this for about 18 months when he started setting it up. By the way, I have no affiliation. I don't work for them. I'm not getting paid to advertise this. I just knew it was coming out. It came out yesterday. I'm going to go through it very quickly, because I think, especially for people that are new or a bit unsure, there's some really simple information. Everything's sort of laid out in a particularly good order, and it is a one-stop for you to sort of just go through and have a look at it. But this is the page. It's normally white. I've just put it in dark mode just because I don't really like things in white. But so landing page is kind of here. I mean, you know, I'm not going to Janet and John take you through every single thing. I'm just going to show you the sort of the main areas. But you've got the markets. This is all live data. It's constantly moving around. Same with the ticker up at the top. Sorry, you've got news articles, which we'll go into a bit more. There are online courses, which we'll go into, which are pretty good actually. They're both video and reading courses. There's guides on how you can do stuff, which again I think is really good. There's prices. All those are then linked to TradingView. You can bring up the charts, etc. So for someone that is can't be bothered having 15 different tabs open, this might be something that's really useful. Or if you're particularly confused about a particular term, they've got a really good glossary with a girl that does a video on very brief 30-second descriptions of what they are, and just sort of really useful. But then you click on the news. They've got all the different sort of news, and you can filter it down. Again, I think it's a really impressive thing. Go into the guides. So the moment this is all exchanges, how you use each individual exchange, and sort of how you go through it, how you can send it. If we just go back, obviously they've got wallets, how you can use the wallets, talking about different tax. It is kind of UK based at the moment, this tax stuff. Version 2, they are actually bringing in a tax platform, if you will. So a bit like some of the other tax platforms that are out there. And crypto cards, so what we all think of those or don't think of those, they're all listed up there, and you can understand how you use them, where they're available, security, networks, metaverse, encyclopedia, as I say. So you don't know what an accidental fork is. You just click on the video, read the description, and then sort of this will play. I won't play it all, but effectively that just comes through. I think it's just very, I've not stopped it. It's very cleanly done. Even someone like myself who's been in crypto for 5-6 years, I still found this quite useful. I just like how it's all there. We don't know absolutely everything, so it's just a good starting off block if you want to delve into it. The courses, so I've started to go through these just because I wanted to test my knowledge. I can assure you, I did complete these ones. You just can't take the test on these last ones, so there are a few bugs still within the system. But some really good sort of courses, again, with that girl Jess sort of giving, 10-minute talks, 15-minute talks, whatever it is, and what they are, and then a little quiz at the end type thing. But breaks it down very simply into what each of these things are, and covering blockchains, Bitcoin. They seem to have a focus on Polkadot, which is great. And again, I got 100% on that, so I don't want anyone to think this Polkadot moon boy doesn't know what he's maybe not what he's talking about, but doesn't have some sort of understanding of it. That's good. And then the market thing, and this was the bit that I quite liked, because this is, let's just pick a completely random coin, deep brain chain, because I'm going to talk about that later with AI. There we go. So there it is, deep brain chain, but it brings them up. I can click on that, link straight away to TradingView. I can add indicators. You can't draw on it yet, but you can add indicators, and it gives you so sort of a bit of a description of what it is. You can go and see markets, where it's got from. Then the other thing, this was a bad example of deep brain chain, but in news, there's none for this one. Great, of course it is. But let's do vet, because everyone's been talking about it lately. So we click on vet AI, but if you go to news, again, none. Right, solid it. We're going for a big boy, ETH. So you go to Ethereum, you then click on news, and it actually pulls up from the news section every news article that it has a mention of that particular token. So in this case, Ethereum. Again, just really useful if you're just got a bit of time in your hand. So as I said, obviously it's going to grow. It's only been live for 24 hours. So if you do start jumping on it today and it doesn't work because, I don't know, we break it, whatever, then, it's going to have bugs in it, and I'm sure they're going to iron those out. But yeah, just something that, because I didn't have anything to talk about in terms of a token, I thought, well, this has come out, and I think it's a good research tool. We always talk about how we can do some research for new coins, and it's there. So yeah, I am a fan of it. I mean, sorry, I didn't mention, but when you got those links to the white paper and the official website and everything, so it's quite well thought out. I just mess everyone about. Every time I see one of these, I just always click bad. Just to throw off the voting system. But you have to subscribe up to it. It's free, and I'm sure they're going to sell off your data somehow. That's probably how they make their money. But the resource is there. I'll put a link in Discord once we're done with this, but cryptosavingexpert.com. Okay. So I'm not going to talk about it today, but Bijan in Avengers chat asked us to go over Near Protocol. So Near Protocol is a token that is actually on my portfolio. It's one of my medium holds, and it's something that I like. I think it's got some legs to it. And as I say, I'm not going to go into full detail with it today. We'll do a proper research of the token, so 15-20 minutes on it next week. But just to give you an idea, it's a layer 1 protocol. So has its own ecosystem, its own chain. It's not called Near the chain. If you ever want to enter it onto MetaMask, it's Aurora, Aurora, Aurora. I think so. But yeah, it's also obviously it works on its own network, but it's also an ERC20 token. It's compatible on Ethereum and BSC as well. It does have an ecosystem at the moment, so there are other projects that are being built off it. I had this open earlier, and it gave them all for me perfectly, but I can't find them now. Maybe it was in another page. But we'll go over it next week. It's one that I like as a layer 1, I think, moving forward. We know last bull run, layer 1s really took off, and other networks really took off. This one, I've got a price for it. Let's have a look. All time, it's on all, yeah. I mean, it peaked at $20. It's still down at 2.4. Matter of fact, the lowest it got was 1.2, so it has had that 50% uplift. But even if it only gets back to all-time high, we're almost talking about sort of at least an 8 or 9x. I think it'll do much better than that, bearing in mind it actually has a live ecosystem. It has been developing very well during the bear market, bringing in developers and everything else. And yeah, I think it's one that I'll be happy to talk about next week. And as I said, it's been on my medium hold list for some time now. So thanks for reminding me on that one, Bijan, and we'll run through that next week. I don't even know if Bijan's on the call, but such as that. Right. So we'll go back to the thumbnail for the call, which was the age of AI, artificial intelligence. And you can't have looked at anything crypto related over the start of this year, so the last 5 weeks, 6 weeks, without just being hit smack in the face with artificial intelligence. And yes, the rest of the market has enjoyed a very good start to 2023. So, I don't need to caveat that. That's just a fact. But AI-related projects have had a huge uptick in popularity, and people invest in their funds. Now, whether or not that's riding off the backs of ChatGPT and other ones like WeJourney. Is it WeJourney? It's not WeJourney. Midjourney. And DALL-E and all those other ones, then yes, of course it has. They've kind of got some mainstream appeal at the moment, and that's just going to filter into what could be the next best thing. But the reason I sort of say it's the age of AI is, we're at the start, whether there's a further dip or not, we are, getting towards the end of the 2022 bear market, and we're at the start of what will either be a ranging period, but most likely a slow start to the next full run leading up to the halving, and then a kick off there. And it's an ideal opportunity to actually find areas that we think, sectors that we think may be big, have a great focus, and then obviously a great growth in 2024, 2025. And just given that the popularity of AI at the moment, and just how that's being used, not just within cryptocurrency, but sort of in the mainstream as well. And we're seeing that, Microsoft are going with it, Google are bringing out a rival, China's going all in on it as well. People are already worried about losing their jobs. Then actually, we might have found the next big hit sector. And if that's the case, then yeah, we need to start thinking about positioning ourselves to finding the right tokens within this sector and then going in on them. Now, because it is a fairly new sector within the cryptocurrency, there are some you'll see in a moment that are dating all the way back to 2017, but generally it's relatively new. We may have to spread, I say I, because I'll be doing this, may have to spread that allocation off across many projects, expecting the vast majority of them to fail. But all we need is one or two of them to really kick off, and we're going to get there. And to me, what we're seeing at the moment with this hype around them is very much what we saw with the play to earn, and even the metaverse to some extent during 2020, 2021. So it feels like a great time now for us. Timing was not near perfect, but last week, obviously, we went in and we spoke about Fetch. And then the following day, I went and bought some Fetch. I bought some Singularity, some Ocean, and some Viote. I only talked about Fetch and Viote a little bit, but I decided to sort of spread it out. And, since then, we'll have a look at the price at the moment. They've continued to climb. Now, at the time, they were already massively overextended, but it was just something that I felt that I would just sort of get my foothold in. I knew it was going to be holding it for 2 to 3 years, and I just wanted to see if I could ride a bit of the hype that was going to continue, and it did. It may still, we don't know yet. But yeah, it was a very sort of positive move, and I hope some of you sort of at least have a look and consider it yourselves. Don't need this article for anything. I'm not necessarily going to bore you to death by just reading through the popularity that we've seen of AI, but it kind of covered what I've already spoken about. I mean, the only thing to say is things like Singularity Net, it's up nearly 300% in the past month. We will talk about alarm bells in a moment about that, but incredibly impressive. I had a look. Singularity have released a DAO as well. Today alone, that was at one stage up at 98%. I don't know where it's at now, but people are really moving into the hype of that. We've seen that there's a mini rally at the moment, and people are just trying to find the next explosive thing. And this is where it is. Now, whether or not it's got any more legs to it, we'll have to have a look at. But so what I did is I went on to Crypto Slate, and I just did the sector by AI. And let me just recycle this so we can have a look. The last 7 days, overall, the sector has increased by nearly 83%. And in the last 24 hours, the volume has been 2.3 billion. But look, the dominance is less than 0.5%. And it's only 4.7 billion. So yes, it's had this massive uptick. But we're $1 trillion now, So we're like 1/200th of the market. And if this is going to be the next big thing, this is going to eat into an awful lot of market share. And from that, obviously prices are going to grow. And they're going to, if that were to happen, they're going to grow at a faster rate than other altcoins out there. So that's why it's trying to find it. But you'll see from this list, there's an awful lot. There's 74 that are on this list at the moment. I'm sure in the weeks to come, that will probably double as everyone tries to jump on the bandwagon. So from that, we need to have a think about, what it is that we want and where we should be looking at that. But I do think that age of AI over the next couple of years will certainly come along us. And I think ones that have got a genuine product or requirement in the world are going to stand to do very well as the world moves towards more artificial intelligence. And I think these are really going to tick off. Now, obviously, a lot of the ones that I bought are quite high on the market cap, and I'm absolutely fine with that from where we are. But even if you have a look, so Singularity, which in the last 30 days is up 800%, last 7 days up 200%, but it's down from its all-time high 70%. So there's still an incredible amount of room to run in there. So yes, there can be a little bit of FOMO that's associated with seeing some good moves, especially when you've been sat on the sideline for so long. But doesn't mean that the rest of the move is gone. If you get in now, you just got to understand that you may see some drawdown. So any move that you are going to make, if it's in the immediate future, needs to be with a longer horizon than just another 7 days. Can I double my money? The other thing that I would suggest, I don't know if this is the best. No, it's not. So yeah, Crypto Slate, it's actually a pretty useful website for being able to delve into things like this and all the things on the right hand side that you can add. It's well worth just sort of sticking that in your toolbar somewhere, especially if you have a research folder or something like that. Really worthwhile. But what I've done is I've not bothered taking every single one of those because I'm not going to go through them all. But I have had a few just pulled out onto TradingView, and I've done this for two reasons. One, we can all see how impressive the growth has been, which is fantastic. But two, we talk about lightsaber candles or unsustained moves up. This at the moment does feel a little bit bubblish. Graph is up 60% today. Well, this will be interesting. Why was that saying 90% earlier? It's only 43% now. I'm not sure. Bear in mind that pullback hasn't been that much. But anyway, yeah. So graph up 60%, and most of these tokens are sort of at least 20%, if not more. So it does feel to me like there's going to be some correction soon. And I'll be honest, because of that, I've taken out pretty much the majority of my investment. So I put in around about $2,000 worth. It was worth around about $5,000. I've taken that $2,000 out, playing with $3,000. Whatever happens to it now, it doesn't really matter. At least I got my money back on the sideline. But what I wanted to show was the thing that alarms me, and the thing that we always need to be worried about is, for those of us that were around during the Dow phase, if you remember, to start off with, there was just his Lord and mighty Savior, Olympus Dow, and then it was just a million forks from that. And, we got into the beginning of 2022, and you couldn't go another hour without a new Dow being made. And that should really be a bit of a worrying sign. And to be honest with you, that is why I'm looking at that sector. I'll be looking at this every day. I want to see how much this increases. And I need to kind of have a go through of how new are some of these. Because as everyone starts to jump on the bandwagon, chances are that the people that have been in it long enough are going to start taking some profit. Then they'll just wait and build again. The other thing that you need to start looking at is most of them are relatively new. So, there's going to be a lot of initial investors that might have had locked up funds for a couple of years that may actually be able to start releasing to the market, and they'll be releasing in the thousands of percent. So that could also drive down the price. But the point I'm trying to make is that if you start looking at an AI and it's only been around a couple of months, or it's only even been around a couple of weeks, you've got to do some serious due diligence as to whether or not this is just someone that's trying to ride the wave, or they have actually a genuine need and a genuine use, and it's just poor timing on their behalf as well, Lodge. Because whilst there is plenty of room to make some more profit within these, the chances are that after this first phase of hype fades, it'll be the ones that have been around for a couple of years. So Graph's been around since 2020. Again, Singularity has not been around that long. It launched in November 2022. So Fetch has been around a decent amount of time, since the last bear market, really. Ocean, again, had a decent length with that's decent history. So we know that it sustained the full bear market. The runways lasted. It's still been developing during that time. These are positive things to see. It's going to be much closer to a finished article than a lot of the ones that are just popping up. Again, we talked about Viota, which again has been around for the best part of 2 years now, about 20 months. What's this one? Is this number? I can't remember what this is. Or numerous, I think it might be. God, I'm really testing myself now. What's PHA? I'm gonna have to go back and have a look. I've seen that one before though. I'm sure of it. Fowler, yeah, that one I know has been around because I remember that from the previous days. Although I'm wondering if it's just it's the Binance chart. I'm wondering if it's just because it's been listed on the Binance. I'm sure that one's been around since the previous bull run. But the point I'm just trying to make is that those that have been around for a long time have a better chance of making it. Just my opinion, but that certainly is going to weigh in very heavily with me. And we're already seeing influencers shilling the hell out of things like FET, Singularity, Ocean. Worryingly, I'm involved in all that. I own all of those, which is why I decided to cut a bit away. But that will only get more and more, and we really need to start thinking about whether or not we're just getting into that overextended bubble part, even if it's a bubble within this bull market, in inverted commas, rally. Deep range chain, this is one of the first tokens I ever invested in back in 2017, 2018. So this one has definitely been around a while. So there, March 2018. Look at this. January 2018. It's pretty much when I started. December 17 is when I started. So, I mean, this one's had a hell of a fall from grace. You think it launched at 50 cents. That's probably how much I paid for it as well. And it's not even a penny now. So, definitely some moves to the upside. I don't even know what it does. I don't even know why I got involved with it back in the day. But, yeah, we were all noobs and suckers back then. And I just was putting my money in anything thinking I could make it. And I obviously couldn't. So yes, there's a few out here. There's some great moves that have happened. And you know what? Let's have a look. When was it? So Wednesday. So let's just put a little line. I can find it again, which I can't. So I got in, you know, I don't know where on the Wednesday, but around about there. And that felt like an overextended move. I was just fortunate that it's gone up again. So it's not saying that it can't go up again. You know, the hype may continue. But just be very careful with how you position yourself now. But I, you know, within my portfolio section, I have an AI section now, which I'll look to add to as and when I build into that. And you know, I'll keep on talking about AI tokens that I'm particularly interested in, or if you guys are interested in, you know, again, they can be research tokens. I think at the moment we may have stumbled across the next IT sector. So that's why I want to be involved in it. That's why I want to be exposed to it. Right, let's just take that back. I've seen the questions are building up. I'm just going to have a look. I can't remember what I was on. There we go. AI. Rational biohacker. Graph seemed like the safest play. Originally saying wanting to go in on it and be a validator. There you go. Obviously it looks overextended now. I wouldn't recommend going in. Yeah, I you know, if you're going in, you've just got to use proper risk management in terms of don't put your 100% portfolio within it. And if you happen to get lucky and catch a leg, maybe just bank a little bit of profit. I'm planning on just recycling that funds when the inevitable drop happens. And if it keeps on climbing for a little bit and I get to take a little bit more out, then brilliant. Richard, is it just me or is the quality not as good on YouTube? Can't make out the tokens of the charts Harry's looking at. How come we don't use Zoom anymore? So that could be the latency thing I was talking about there, Richard. I am just temporarily on YouTube. I've obviously had that issue with Zoom since August. In fact, I spoke with the engineer last week and they've sent me some software that I need to run. I just haven't got around to running it, so it means I have to uninstall everything and reinstall it. So that's why we are on YouTube at the moment. I'll be honest, I prefer YouTube. It's a lot easier for me for editing things, pulling it together, just dealing with chat, etc. The main drawback for me is just not having that vocal interaction. But yeah, I really want to try and find a workaround for it. But perfect, Richard. I have been asking for feedback on this, so great that you've sent that. I've got a feeling it's down to the latency. Let's have a look at that. I think what I'll do next time is I'll put it on normal and we'll see how that looks. Okay. I think the main reason we're on YouTube is the member. So that was something that someone actually did say is, yeah, people can pause and come back and they can tell my voice for a little bit. But yeah, thanks for that one, Bijan. I think that's Bijan. Right. Okay, so kind of covered AI as well. Cracking through this, 45 minutes. There we go. So what I want to talk about, one other thing that everyone's banging on about, it's something that Simon hates, but everyone's talking about it, so why shouldn't we? Sorry, just a quick note. Bijan, just remind me afterwards, now that I know your ID, I can actually put you as a moderator as well. So, yeah. And I didn't mention at the beginning, but I've seen people have started to fill out. Thanks for anyone that has filled out the poll. We are going to get to that a little bit later on. The poll, which should be pinned to the chat, was just how much people are backing in the market. I'm not talking about dollar value, just percentage value of your portfolio. Just interested to see where people are with that. Sorry, other things just keep on popping up. So we're going to talk about Golden Cross, and we're also going to talk about the Death Cross, because something very unusual is actually happening. Never happened before on BTC, and it's getting a lot of coverage at the moment. So for those of you that aren't aware, I think most of us are, Golden Cross and a Death Cross, they use the same indicator. So we're looking at moving averages, whether you use a simple moving average or an EMA, completely up to you. They will give slightly different dates and values, but anyway. So they consist of the 50, I'm going to say EMA, but whenever I say EMA, just think MA as well. So they consist of the 50 EMA and the 200 EMA. A Golden Cross is when the 50 EMA crosses over and above the 200 EMA. Generally, that's a very bullish signal, and that's why it's called a Golden Cross. And obviously, as I say, depending on the time frame, can lead to decent extended bullish momentum. The Death Cross is the opposite, and that's where the 200 EMA crosses above the 50 EMA, usually signaling if it hasn't already, a reversal in the market and some downward pressure. And again, depending on the time frame we're talking about, that can be for quite a significant amount of time. So what's everyone talking about? What's everyone got their knickers in a twist for Bitcoin? Well, basically, up until last week, Golden Crosses and Death Crosses on the daily time frame were the absolute pinnacle in Golden Cross, Death Cross. I want to say accountability. It's not quite the word I'm looking for. But because it never really happened on timeframes that we generally use. I mean, if you want to do a 2 day, 3 day, whatever, they might be there. People always used to refer back to how it was on the daily. Given the higher the time frame, the better the chance that the technical analysis would play out. Well, what we've got at the moment is, I'll get the chart open, shall I? So let's just move on to the daily. So what we've got at the moment, this is Bitcoin's price. So the red is a 200. I don't know if this is an EMA or an MA, but they are both the same, whichever one they are. So the red is the 200 and the green is the 50. And what happened yesterday to the 6th of February was the green, the 50, crossed over the 200. A Golden Cross occurred. So everyone on crypto Twitter, bullish momentum time. We're already in a bullish uptake. Trend is your friend until the bend at the end. Well, it's already trending upwards, and we've seen, the pinnacle of our cross TA on the daily signify that we've got further uptick. And let's. I'm not trying to rule this out at all. Let's go back and have a look at other Golden Crosses. So let's try and take it back. We can go all the way back. So we are now in 2015, Golden Cross on the daily. That started the 2015 bull run all the way to the 2017 top. Then what do we have? We had another Golden Cross looking very similar fractal pattern to where we currently are at the moment. We can have a look back at that. Another Golden Cross, and that led from April 19 until the full dip with the cross again, October 19, so nearly 6 months of bullish momentum to be seen. We had some choppiness here, and crossover, cross back. Pandemic obviously made that Golden Cross very short-lived, But then what did we have? We went into May 20, we had the Golden Cross again, and then bang, that sparked the next bull run. Death Cross, Golden Cross. So we had a few more months before the market completely rolled over and down we went. So it's fair to say that Golden Crosses on BTC generally, unless you have a major news event, generally lead to minimum of 3 months worth of bullish momentum. So, we could be looking at anywhere now, sort of early summer, May, just seeing this uptick. And if we are we ready for that? What does that necessarily mean? So that's something that we need to factor in. But the thing that has really got everybody confused, and crypto Twitter's knickers in a twist, is this. So now we're talking about the weekly time frame. We'll zoom in. So again, the green is the 50, the red is the 200, and what we're now seeing is the red and the green are about to cross over. Now technically they have crossed this week, but we are going to have to wait for the close of this candle to actually see these extending beyond each other. Now, we've never been able to talk about this before because it's never happened that we've had on the weekly a death cross. I don't think we've ever had a golden cross. We've not. And so we almost came close to a death cross here, but it wasn't quite. So this has never happened. And the 200 EMA on the weekly is not something to be sniffed at. We talked about it all the time as something that was going to catch this fall. It didn't. But in previous bear markets, it has provided a decent amount of support for us into sort of turn around any particular dips. Well, what we're staring at now is actually the 200 EMA above price where we are at the moment, and now crossing over. There's no way, it doesn't matter, I don't know the maths, but even if this week BTC went to 67,000, the cross would happen. It just invalidate the TA. But at the moment, with where the price is, this cross will happen, and you can see this effectively forecasts where we think it'll be till the cross happens over. And actually, unless we have a really significant uptick in price, we're looking at 2024, and these two haven't even converged to each other. Now, the algorithm that does this, I didn't program it myself, but you can see the dots are getting further and further apart because I think it's less confident in the path. What it is, because it's obviously just judging it on the trajectory that the previous known lines have taken. But you can see that on the weekly time frame, these things take an awful long time to correct. So the real question is, well, who's going to be the winner? We've got the bullishness of the Golden Cross, which has not really ever defeated us. It defeated us once when the pandemic happened, and that was very short-lived. But generally, whenever it's happened, it has led to, as we've seen, anywhere from a minimum of 3 to 6 months, but sometimes 18-month period of a bull run. We also talked about the fractal pattern that we were seeing back here. With that, everyone thought it was going to go lower. It burst back up after a candle, consolidated, and then this is the weekly, but on the daily, it Golden Cross and off it went. Consolidated here. Everybody thought it was going to go lower, burst up, consolidated. Golden Cross happens. Are we going to see a lift? I don't have the answer to that. All I can say is the rule seems to be the higher the time frame, the better chance that it's going to play out. Well, the highest time frame that we've got in play at the moment is the weekly. Find out with an awful lot of confidence. Forget the crosses at the moment. Forget the death cross. The 50 EMA is going to act as resistance, and so is the 200. And they both are sitting around about 25,000, which is the tops of these weekly candles we had over the summer, which we know has been weekly resistance. So I personally am hedging towards a rejection there. There are other factors that are leading me to believe that. But the other thing is, both on the daily and the weekly, just because the cross happened doesn't mean that instantly we're going to see the uptick. These are daily or weekly candles. It means that they take a significant amount of time to form and close compared to hourly and 4 hourlies. So it may be a lag before we actually see anything happen. So what could we realistically see? We could see the daily. Let me just put this back onto the daily. Kick in. We might see that climb, retesting that 25k level. But then the cross is fully confirmed. The cross has actually happened on the weekly in a couple of weeks' time, and then what we see is that rejection and it driving the price back down. That would be a conceivable argument for both of those. The other thing that is interesting here, just because I'm looking at it, is obviously we've had this big spring up, but candles are starting to compress a bit now. And, is this actually, it's compressing because we're coming up on resistance, both from a previous price and also the EMAs. So we're getting squeezed a lot tighter and a lot tighter, and we're actually just inevitably going to roll over. Potentially that's it. And I think we're going to talk about that a little bit later on, so I'll leave it at that at the moment. But there's a lot of discussion going on crypto Twitter. There's a lot of YouTube videos. Ben Cohen, who's someone that I really like into the cryptoverse, he did one yesterday. If you're interested in golden crosses versus death crosses, he's going to go into a lot more detail, a lot more knowledgeable about it than I am, and I'm more than happy to link his video in Discord afterwards. But it's only about 10 minutes long. But yeah, well worth a look. But as I say, a lot of people are talking about it, so it's just never happened. We've just, normally people talk about the death cross and everyone go, well, it's already priced in because everyone knows that THA happens. Well, wait a second, we've got the exact opposite happening at the same time frame. And so, yeah, so maybe they just both cancel each other out and we continue raging. Maybe that's just the sitting on the fence argument for it. Let's have a look. Anyone else there? Don't think so. Okay, perfect. Right. I have no idea what this next chart is. Monthlies. Okay. I'm not going to spend too much time on it because we touched on it on Tuesday. Tuesday was obviously the last day of the month, but I just want to show you how the monthly candle actually closed. So just zooming in again and just looking at these levels that we've had on this chart for months. I mean, it absolutely hit 23.3k monthly close and no more. Exactly where this line was drawn before. Yes, price is currently sitting under it at the moment, but hey, we've got 21 more days. But this is the level, isn't it, really, that we're really paying attention to. And actually, talking about this now, I think now's a good enough time to talk about it. So if it's to break, whether that goes up or down, what have we learned? Typically, whatever it breaks, it's the next level that it interacts with. Well, that's 20k for us if it's going to go down. This talk of it getting down to 15k, that could take a while. We've got to battle with the 20k first, and we know that 20k was a great level of support and resistance previously. So, yes, we might have busted back through it, but that doesn't mean it's going to be just as an easier journey down. So this battle may not be over anytime soon. And likewise, we've kind of got, if we can monthly close above this, don't care about the wicks, if we can monthly close above this, we've kind of got free reigns of 29,000. And that kind of goes into that poll that I ran, which let me just end the poll now. And hopefully I can actually see it. There we go. So what have we got? We've got no one has zero back in line, which is great. Up to 25%, 14% of us, and then up to 7%, over 57%. I didn't do the poll, but I am about 45% in, so I suppose I'm in that up to 50% bracket. The point that I want to raise is, yes, we've still got this battle in around the 23k mark. It's shown some good resistance for us in the past, so there's no reason to suggest at the moment that it's not. But what I'm wanting... Oh, you're right, Jamie. I'm just being an idiot. 71% have zero. Thank you. I was going to say those maths didn't add up. Okay. Well, this is the point I suppose I'm trying to get to and to make. Thank you, Jamie. We've got to now think about, well, in my head, how my pattern has shifted, from the start of the year, is we've fallen so far. We've fallen from just under 70,000 down to 15,000. That's a nearly 80% fall. I think I've got a chart with this somewhere. That one. So I was going to talk about it somewhere. The question is where. We'll just do it on this one. Get rid of that. We don't need it. Lose that. Move on to the daily. Or the 3 daily. Do you know what? Sorry. I hate the look of that chart. I'm going to change it. Sorry, 2 seconds. Bitcoin. There we go. Let's put it on the 3 daily so we can kind of see everything. I follow a lot of people on Twitter. I follow a lot of people on YouTube. And yes, the vast majority of them are either perma bulls or perma bears. So it sometimes can be really hard to read into that. And I've been trying really hard this year to try and get my head out of the echo chamber that we've got further lows. And, we will not only retest the 15K, but we will actually break it, as in soon. And my thought process really has been that Bitcoin's been surprisingly resilient. We've had a great explosion through. We've recovered the losses that were caused in and around FTX. We're battling to recover the losses that were caused around Celsius and everything else. And it is showing some strength. And it's now got to a point of, well, what could cause the price, given its resilience and its strength that we're showing, to actually drop now, what was that, best part of 30%, and then break those lows? And I'm not sure, I know, barring some other black swan event, and, we don't know what that's going to be, but it feels to me like we're in the near term, and I say near term, sort of 3 to 6 months, we're not quite there yet, unless it's going to take a black swan event. And obviously we don't know what they're going to be. So we have to kind of be patient with that. So then I was looking at what other factors can affect that. So, we've got the US market, the economy, which despite Powell screaming that he's going to see this drop to 2%, the market just doesn't really believe him. And it seems to be increasing. The dollar's on the decline. We're getting jobs back in. What do we have? Nearly 600,000 jobs come in. Now, I didn't bother talking about it today because I didn't want to run out of time. But, I looked into that. And of the 500,000 jobs, nearly 200,000 of those were in the leisure and service industry. And it seems to me that the reason there's so many more jobs is because most Americans have to have 2 jobs just to make way. But the statistics suggest that the labour market is still very strong. And if any of you listened to Powell speak today, he was talking about the fact that the labour market is strong. There are nearly 5 million job vacancies available above what the supply is. So, they've got a big hole to fill there. Now, in normal times, a strong labour market is not particularly good when you're trying to bring down inflation, because what you want people to stop spending. And unfortunately, that generally means that some people have to become unemployed. And then, people stop spending, they start saving, it starts to slow down the circulation of money floating around the system, bring down inflation that way. But what we're seeing at the moment is the absolute opposite. 517,000 new jobs over the last 31 days. That also takes into the fact that we had 118,000 jobs lost in the tech sector over that same period. So it's actually net 640,000 jobs that were found. So, really positive news. And the market read into that, whether or not we think it's the right thing. What they're saying is, you're going for a soft landing. We think the soft landing is going to work. You are not increasing the rates as much, but you're still increasing them. We think we can weather it. Now, the problem with that, I suppose, is at some stage, Powell's going to either have to make a choice, and he's either going to have to sorry, this is a bit long-winded, but I'm just trying to get my thought process into why I've started to get back into the market. He's going to have to either decide to get a lot firmer in his stance of how he's going to bring down inflation, or he's going to have to stop being so on the fence when he starts talking about this and really spell out how he sees this achieving it. And most of the market think we're only going to get one more interest rate. Well, he's suggesting that we don't know what the terminal rate is. So how do we know he's going to stop at 5.25%? He might need to go higher to bring that stuff down. But at the moment, because we don't have an FOMC until the end of March, I see there as not enough news events to particularly scare the market from where it is. Yes, we've got CPI data next week, and we've got another CPI data on the 14th of March, which are obviously going to show us where inflation's been. Now, over the past 6-7 months, inflation has been coming down. And if we still continue to come down, the market's going to be that as bullish. So until Powell actually gets to stand up in front of us all and say, stop, I'm increasing it more, I'm really struggling to see from a economic point of view what's going to slow down the bulls. And because of that, it's a case of, well, I'm starting to think about moving partially back into the market. And I have been doing that, and I've got a bag of Glimmer, got a bag of DOT, a bag of Ethereum now, got a bag of BTC, I've got my AI coins, I've got a couple of other shit coins, and I'm about 45% back in the market. And I feel relatively comfortable about that. And again, you know, I go back to the reasons we've had that. I do have a chart for it. I know I do somewhere because I drew this on. Here it was, the chart I was going to use, and it was on the 3-day. We've had 78% correction at the moment. So if you've waited all the way through the bear market, you're probably not going to be leaving crypto in the next 6 months anyway. So now we've got to be thinking, well, how much more of a correction do we really need, knowing that we can't hit the bottom? So is there a greater risk of us already have missed the bottom and now just holding on to that, and we're really going to get in at a high level? Or is there a bigger chance that we're actually going to create an even newer low? I feel that now that we've already done 78% of the move, the chance of us getting a further, 30% fall, even to get us down to 15,000, without a black swan event, feels quite difficult. So I had to make a decision of, well, do I want to go partially in or fully in? And the idea is to keep a little bit of capital on the side, ride this bull market, this run up until it runs out of momentum, and then we'll reassess as to where that's going. And that's exactly what I'm doing. And I mentioned to you that I took a little bit out of the AI stuff just to cover my bases. But the principle being that I feel more comfortable knowing that these were going to be bags anyway, particularly my DOT and my Glimmer, more comfortable having some of those at some great prices. And even DOT, it's under $7 at the moment. I think DOT's going to be a monster next year. So it will easily surpass, in my opinion, its previous all-time high. That's just, so what's that? 50, 55? So, we're talking an 8x just to get to that. Yeah, that's fine. And I'll happily stake it. And if you have to wait 6 months till we start seeing that, I'm just going to be earning that passive DOT. So that's sort of the thought process that I've had. I've obviously kept some behind. I do personally, I still feel that the market will correct. Even if we have a soft landing, it will just mean that interest rates stay higher for longer. And that's bad too. The market at the moment is celebrating interest rates going up because they're not going up as much as they have last time. It's madness. But at some stage, they're going to realize that actually that's not sustainable. And poor Joe Blogs on the street, he's going to be battling with still high levels of inflation, but also high interest rates every time he ever takes a loan out or takes a mortgage. So, he's going to get a double squeeze, really. Credit card debt is almost at $1 trillion at the US. So, yeah, I do feel like there will be that correction. But will we see it break the low we're already at? I don't know, but I'll be prepared for it if it does. So that's my rationale as to why I've started to edge back into the market. I'm not really particularly advertise what I do. I don't think that's why people join the group as such, but I'm happy to come on a week like this and be like, that's where I sit. And, the thing about being a trader is not being entrenched in your views, and I've just reevaluated where my risk is and where my time should be. And that feels comfortable now. And I don't feel so bad, having a bit of money in there. It's been great to see some of them pump. Don't get me wrong. I wasn't buying a huge amount of bags down here. I bought some DOT and some Glimmer, and a little bit of Bitcoin, but a lot of the stuff's been on this leg up, and that's it. So yeah, so that's where I am. And I'll just have a look, see what other people have put. 74% of the point people Marky Mobster went back all in, and that shocked you. Yeah, I remember you saying about that. So I think he is, if you don't follow him on Twitter, he's a love him or hate him kind of guy, because he's he is. I think that's the best way. But I think he talks good sense, and he talks a good psychological understanding of where he personally fits in comfort within the market. And so I subscribe to him, and he talks about exactly the same. And I'll be honest, I've been partially led by some of the things that he's talked about, and I've actually gone, you know what, that makes a lot of sense. I want to delve into that a little bit more. So yeah, I definitely recommend following him. I think he's he's very good. He also, and he called the top of the bull market. I think it was here. I think it was. So what he was waiting for was like a failed rally, and as soon as this failed rally happened, it was like beginning of December. He tweeted out end of the bull market. He got no end of shit for it, but he was right. He was absolutely spot on, and that's when I started following him. Wish I'd followed him earlier, but anyway. So he's ex-RAF. I don't know him. He's a lot younger than I am, so that he wasn't in when Simon and I were in. But anyway. Right, let's have a look. I saw on Crypto Casey's channel the US is redefining how CPI has been calculated. So yeah, that's not new. So what they've done, so the CPI effectively they have a look at the, they create that shopping basket of goods, and they can cherry pick what's effectively put in there. Look at the price it is today versus the price that it was over the last couple of years, and effectively they're changing that now to just be in the last 12 months. But I do have an article on this somewhere, because I'm still trying to understand this. Let's have a look. See, I was looking at it today because I was thinking about talking about it, but it's not this one. So what I want is someone to actually explain to me, to show me visually how the calculation is done. I just got to open up the same article. There's one which has an equation on it. But it'll be in these anyway. Let's go into this. So let me just have a look. Yeah, it is. So this is what confused me. So I'm reading this article here, this paragraph. Because at first I was like, they're just fudging that now because, they're going to just take you from 2022 data where inflation peaked back in June. So they get to talk about July, August, September, October, November, December. So 6 months of 50% of that time frame when inflation's coming down. Whereas if it's done over the last 24 months, they'd only had 6 months of it coming down, 18 months of it going up, or 10 months of it being stagnant, 8 months of it going up, 6 months of it coming down. You know what I mean? So I thought they were fudging it a bit. So I wanted to try and look into it. But actually, when I read this, and this one, starting with February 23 publication of the CPI data for January 2023, so the Bureau of Labor Statistics, the BLS, will annually revise the CPI weights based on a single calendar year of data. So I was like, okay, they're going to use 2022 because we're talking about 2023, utilizing expenditure data from 2021. So actually, it seems like they're taking this data all the way back from when inflation was at 0.25%. Now, we've had it at 0.25% for such a long time. Let's just... do have these charts close to hand, so we just put that on 5 years. I mean, 2021, it's not telling me what the actual figure is. Going to expand this out. Nope, don't want that. Sorry, what have I done there? Abort. We just have to go on the squiggly line. Yeah, it's inflation, isn't it? So it's under 2, but I can't tell you how much it was from 2021. Although it has gone up. So anyway, it didn't necessarily seem as bad as it was. I thought they were effectively fudging it just to swing it in their favor, like how they changed the definition of a recession. It's not the first time they've changed how they measure the CPI. So, we'll just see what happens when it comes out on Valentine's Day. So the 14th. So yeah, we're either going to love or hate crypto that day. Sorry, crap pun there. Let's have a look. Bijan's deleted the message, not sure what. If China turns on the money printer, where does the money go? Yeah, okay, so this is another thing. So again, I read another article that, China has, I think it's like I want to say billion, but maybe that's too high. It might be in million. But they've got an S-ton of, private citizens, because they've been locked up for so long, they have not spent anything. So a lot of private citizens have funds just ready to go. Now, they're also using quantitative easing over there. So where's that money going to go? It doesn't matter what the Americans do. If China decides to invest in America and pump billions of dollars into America, that's not going to help inflation. So yeah, there's definitely a factor there, and we'll have to wait and see. Not surely real estate with that exploding there. Yeah, I mean, I could go all day just talking about real estate in the US and jobs and everything else. When I say talk all day, I'm not an authority on it, but I'm just trying to understand the better position to make a decision. And maybe I've made some ill-formed understandings of those, but to me, a lot of the data doesn't seem to stack up. But then again, it's not stacked up for 2 or 3 years, so maybe I am reading it wrong. She also suggested that the markets need to do well because there's an election coming up. So, yeah, there is. But that's what we all thought midterms was going to be, is, they were pumping it to midterms and then they were just going to let it implode. And then, give them the 2 years to build it back up and recover it. And that'd be what they could stand on the lectern and talk about. So, yeah, it could be that they're using that now. Completely agreeing with that. Seems like they're taking a punt on Web3. I'm not sure what you're relating to there, Bijan. But okay. So yeah, that's why I've gone back into, so there's so many things open here. I'm just going to try and close a few down. Close. So I can find where I was. Right. Okay. What did I want to talk about? I want to talk about today, because again, today's like another little day where the price gets to move. And I genuinely believe that I'm going to put a different chart on because this one can be kind of confusing to look at. So let's just go with... Oh no, you know what? We'll stick with this one because I need some information from it. But generally just ignore what you can see. So it's fair to say, just looking at this, BTC is still ranging. That's it. It's been ranging now since that last large pump up on the 20th of January. And yeah, we've seen some moves down, but they've always been followed up with corrections. And at the moment, it kind of feels like we've touched the bottom of the range that we're in and we're correcting back up. And today was a bit of an interesting one because, let me just change this chart. It is a bit messy. Here we go. Let's go on the 4 hour here. And let me just... Sorry guys, I was ill prepared for this. Settings, styles, let's get rid of that. We don't need that. That. By the way, in case any of you are wondering or asked, you can't get this indicator for free on TradingView. Right, but anyway, so I don't know why that didn't disappear. So we still see that it's ranging, and we can kind of see it's a 4 hour candle. And what we had was waiting for Powell to talk. And before he spoke, the price was down here around about 23,000. This is the 50 EMA, remember? And then suddenly he started saying some relatively dovish things in this speech. It was basically just a Q&A. It wasn't anything formal as such. The price suddenly moved up and it shot up, and then it hit something, obviously, and it came back down. Now this is an MA. If I do the EMAs down there, actually, let's get rid of this one. And what you can see is it just moved because of what he was saying. That actually that candle, this candle here, I'm not worried about this one that's formed whilst we've been talking, spiked up and it came back down and it closed below this 50 level. And he spoke about some relatively positive things, and it kind of says, well, why did the market suddenly stop there? What is making it turn around? And there's a school of thought that nothing that is said in the news is what caused the market to move. However, market makers utilize the news to time when they move the market. And I've kind of talked about this a few times. I'm not, that's what this chart effectively helps me understand. And when I say helps me understand, it confuses me more than it helps me, but I'm trying to understand it better. Right. Caveat and the excuses out of the way. I can't find the charts on now. So, I was like, well, why did it turn around at 23,400? What was the reason that could have turned it around? I'm going to, for those of you that watch Siam's video this afternoon on high block capital, I'm going to talk about high block capital as well. I have a completely different understanding of high block capital than Siam does. So if you don't believe in what I'm saying, absolutely fine. But I utilize that differently to how Siam does. And we're going to have a look at high block. So this is high block. And this is the liquidation heat map. So let's just read what this means, because this is where Siam's got it wrong. So I'm just going to read this top line here. Liquidation heat maps are the estimates of potential price levels where liquidation events may occur. Okay, liquidation levels. So this takes data from, because I've set it to Binance, has a look at the Binance order books, and this is perpetual. This is not spot. So this is derivatives trading, and it has a look at where people have gone in at the market and at what leverage they've used. And then from there, it can calculate roughly where the liquidation levels are. And so this is not an order book. So when Simon talks about liquidity, it's not liquidity that's down here. This is a liquidation level. And it doesn't have people's stops in. It doesn't understand stops. So this is a very fluid chart. So it goes on to then say, if a trader knows the location of other traders' liquidation levels, it may provide an edge similar to how knowing where the other traders' stop losses are. HighBlock assists traders with this information by attempting to predict the price liquidation levels. Okay, so can't stress it enough. Liquidation level heat map. It's about liquidation levels, not liquidity. Just because they sound the same doesn't mean they are the same. So I will zoom into this in a second, and if the quality is not great, Richard, then you might not be able to see it anyway, but when I zoom in, it'll be fine. But what you can see is this is the last 12 hours. In fact, this will be whenever I last used it. This is a fantastic tool. It costs a lot of money though, so it's like £600 a year to have, or £400 a year, so it's not the greatest. But what you can see is this is over the last 12 hours. Every single one of these candles is 1 minute, and it's basically done nothing. What you're looking at is where there's a deep purple, there are no liquidation levels. And then as those colors start to build up, as you can see on this key down the right, that's when the size of the liquidation levels get bigger and bigger. And because we're only on the 12-hour chart, it only goes up to 600 million. And I'll zoom out a little bit later. But what you can see is as time has gone on, these liquidation levels are starting to build. So people are placing shorts effectively in this area, and it's starting to get thicker and thicker and thicker as people are trying to predict what they think the move's going to be. So I'm going to move my mouse over here, but we're actually looking over the right hand side. But if I hover it over there, you get the boxes. But what can you see has happened? It suddenly got to enough levels of liquidation. I'm going to have to, it's annoying. I wanted to point with my finger, but that's not going to help. But what you can see is there's a hump that goes up vertical, and it takes out all of those different colors, doesn't it? So that is price hitting liquidation levels. We've already talked about when a player gets liquidated, a market maker gets paid because he's already taken the other side of that. So liquidated on a long means that a short's happened. Short contracts, blah, blah, blah. The minute chart, this. So it whipsaws up, takes out as many of those as it needs to get to the level it is. And you can see it was really building up anywhere from 23,100 to 23,000, wait a second, 23,400. Wow. What price did that jump up to? It spiked up to 23,350. Suddenly magically turned around. And if we take it onto an even lower time frame, it didn't just turn around, it then dumped and went below. We now go back to HighBlock. What had it done? In that period, it had gone up. Someone decided to YOLO in and start probably putting some 100x trades on because that liquidity level's pretty close. A liquidation level, sorry. Market maker just reversed it, took those out as well. The volatility. And they're moving the price to satisfy them. And they had the cover of Powell's speech to do it. And this is why this is a useful tool. And I wish I'd known this, a year ago. Because this gives you an idea of where you can place entries and where you can place sells. Because generally speaking, the market maker will move to these because he is providing liquidity to the market. I'm not talking about liquidity. He needs to make some money at the end of the day, doesn't he? So he needs to move the price so that he can liquidate people and take the other side of the trade, then sell it on the way the other direction, and then he benefits from it that way. Now, we've already seen that there's liquidity levels building up. And as a matter of fact, where we are at the moment, right on the far right-hand side, it's pretty purple. No one's really placing trades with liquidation levels in and around there. Why necessarily would you? But we can now see where could it go to. So potential targets, really, in the very, very short term. And this is another thing. Simon was using the monthly chart, and I'll show you what the monthly chart looks like, to talk about short-term moves and $300 moves. I would suggest if you do use HighBlock Capital, and you're only talking about a $300 move in the short time frame, you want it on the lower time frame you can use. But we have liquidity levels down at 22,500 and also at about 23,800. Okay, that's not enough to necessitate placing a trade, but we can use that information to go and have a look at the charts. And we're going to go back onto a bigger time frame here. Have a look, 23,800. Well, wait a second here. 23,800, kind of around about this local top. You know, we've been ranging, so it's not within the amount that we don't make there. 2,500. Again, we're picking up some of these bottoms here. So he's going to have a nice day. He could just play this ranging pattern and make those moves. So I said to you the last call that we should have put the boxes on for FOMC. And I mean, I'm not going to waste time going back through, but I was tweeting on Discord. I was commenting on Discord as and when the FOMC conference was happening. That is exactly what was happening. Price was moving and hitting those levels. And, you know, that school of thought has really changed my opinion. The fact that actually, potentially, it's market makers that move the market and they just use news events to do that. And as I say, there's some very clever people. There's a gentleman called Traders Reality. He speaks very fast, but he's very knowledgeable of it. There's Travel Trade Chill. She's an Australian lady. Talks about it quite a lot as well, both on YouTube. I'm just trying to understand that, and if you can try and get in that psyche of sort of how it is, then maybe it can stop you from, you know, YOLOing into trades because that's what they want you to do. It changes your mindset, and they work on things like rule of threes. They talk about different session times and everything else. It is very clever in how they have a look at it, and you know. I suppose the other thing to say is that they go down to the 15-minute time frame, very short-term moves, but then they'll have a look at the daily or even the weekly, and moves on the daily and the weekly take months to play out. So, you know, if we're looking at daily moves, then it might well be, I'm not going to bother going through that, but it might well be that it could be months of ranging until they've met where they need to go to. So it's interesting to see. Just to sort of re-emphasize, so just have a look at where, you know, the big blocks of green and yellow are starting to build up. I'm going to change this now. So if I change this to a 1 month and I run it, give it some time. So now we're starting to see, you know, deeper sections of it, but bigger builds up. And look, the scale, you can be, so before, bright yellow was 600 million, purple's 2 billion. You know, to get bright yellow now, we're talking 20 billion. So, you know, it's collating a lot more information there. So that's on much bigger moves. But you can see, you know, it moves up, it takes out levels, comes back down, resets, takes out levels, and it's just inducing traders to, in this instance, to play shorts because it, you know, what does it, spikes up, brings the price back down, everyone thinks that it's going to fall, then they just take it back up, take you out. And you can just see how it does that, and it moves up. And it is very clever. But there are some key levels, you know, 25k, very important level on a longer time frame. 18k potentially, but I'd be looking at this 20k level really first. You know, you're talking there's $16 billion worth liquidations just on Binance alone. So that's where you're looking at the juicy figures, and it can hopefully try and point you in that direction. I've been saying it for months that when I mastered it, maybe I can explain it a little bit better. I am nowhere near it. One, it's very complicated. Two, it takes a lot of time, and I just am doing other things, so I'm just going very slow at it. But yeah, must have put people to sleep because there's no questions on that. Okay, we are close towards the end. You'll be happy to hear. I just want to try and give any bears in the room maybe a little bit of hope, and I want to talk about a few divergences because there are plenty on the charts that we should be looking at. I'll leave the MAs on at the moment, but what I'm seeing is there's a number of bearish divergences which could play out. So, you know, a divergence is where one indicator is going in one direction, where price action is going in a completely the other. And yes, you've got standard and hidden. We're not going to go necessarily into that. Oh, someone said please check Discord chat. Avenger chat down here. Okay, thanks. Matt, I'll have a look at GRT. Yep, I did speak at the beginning, but I'll quickly go on that. Check Simon's Telegram. He's literally speaking about the same liquidity references. Mo, he's not. I'm saying that he is misinterpreting how you read that. So, yeah, he's talking about liquidity as in order books. as in areas of buy. These are liquidation levels. So anyway, unless he's fired in on Telegram now, which if he has, then apologies. I'm not sure. Okay, anyway, I will, I think he has. I'll bring it on the screen so people can see. Following on from the update, when you zoom out, there's a big kind of liquidity. See, it's not liquidity. Okay, it's liquidation. And it makes sense from trading perspectives. Market could really take out the recent lights. Okay. Thanks for that, Mo. Thank you. Back to divergences. So what am I seeing at the moment? Right, well, let's start with the RSI. Okay, so let's just bring the RSI up a little bit and let's make this a bit bigger. So what we can see is the RSI has clearly made a high, lower high, lower low, lower high, lower low, etc. So it is in a downtrend. So draw the line on. Doesn't really matter. We've got the downtrend there. But what's price been doing over the same period? Price has been continuing up. So we have got that divergence there. Now, one with divergences is you don't know when they're going to kick out. So we don't know when it's going to end, but at some stage, it's likely that will play out. Now, where it plays out to, it's anyone's guess. I'd certainly be looking at previous price action around about the 20k level, also tying in at the moment with the 250 EMA on the daily, and maybe that's where we see that drop to. So, you know, if that's the case, that might be the last chance you have to get back in. You know, going back to where do you feel comfortable in the market, you need to prepare yourself for that. If you're happy to wait, if you believe that Simon's telling you the truth and we're going to go below 15k, it's absolutely fine. You know, I might well be wrong. But we could see a drop, tie in down there to 20k. Look at high block, wait a second. On the monthly, 2800, there's definitely a decent bit around there to kind of capture. So, you know, it's another thing tying in. Got the previous price action, etc., etc. You get the point. I won't hammer it to death. Okay, let's bring that back down. We'll leave them on the chart. But what we've also got is a similar situation with volume. So volume started off strong, but has been tapering off, and yet prices continuing to increase. So we've got another bearish diversion. So, you know, as I say, we don't know when they're going to play out, but more often than not, especially on the daily, divergences play out, whether they be bullish or bearish. And we've got two bearish divergences at the moment, which is suggesting that price should have some form of correction, which we kind of know anyway, because it looks overextended. It looks like it's rolling over. Typically, when you see this kind of coiling, I only found one instance in the past. Let me get rid of these now because they are just getting in my way. You know, coils over. What's it going to do? Starts to coil up and, you know, starts to sort of roll with a bit of a drop environment. It drops. Coil up, roll, it drops. Coils up, rolls, it drops. You know, same up here, same up here. The only instance I found where it didn't do that was down. Oh, yeah, it must have been this one. Was down here. It sort of rolled over, but then it shot back up. So, yeah, maybe it does do that, but it kind of feels like there's going to be some form of correction, which is what we would want. If you wanted a bull market, we're getting close to that higher high. We haven't quite taken this out to get a higher high, but we've certainly beaten this high. So we could have broken the trend. We need to form that higher low, which, yeah, could be down at the 20k level, could time with a lot of this stuff, and then off we go. So, you know, there's definitely some signs in there outside of news event, outside of market makers, outside of the economy that suggest that Bitcoin and then altcoins that go with it could have a correction, and that would be healthy for it to do that. But you'll get down to 20k and everyone will be saying, this is it, this is the turnaround that's going to take us down to 15. I'm just saying, temper that. It may well be, but, you know, best way to edge back in is buy at key supports. So buy a little, well, I will be buying a little bit more. 20k is key support, so I'll allocate a bit more in because we've already had that huge fall down. Sorry, I think I've regurgitated that to death. So anyway, back to the divergences. There's a couple that are on there, which I think, you know, certainly worth people having a look at, maybe marking the charts and just considering that we might see that pullback finally from this overextended move. Hey, maybe it ties in with CPI and maybe the market makers find a reason to move it down and take that liquidity. Okay. Not sure what that chart was for. These were charts I was using earlier. Not sure what that chart was for. Okay. 3 charts, no idea. DJ Druid, thanks, Harry. That's really helped me understand the high block. No worries. But yep, a new message. Yep, thanks, mate. Sorry, I should have checked Telegram after you said that. Right. Okay. So, in terms of the micro picture, for me, I'm not really too sure there's much we can say. I know, we've been able to build pictures of where we are in terms of Fibonacci's or previous price levels. But looking at Bitcoin, I mean, we could draw the fib, and we can have a look at see what I've done. We've definitely found the top here, so in theory we could go from the bottom. Sorry. Have a look at this top here and have a look. But actually, it's found support outside of it, so fib's not really working. Maybe we could have had a look to see if the extensions have gone, and we should have had a look at it here. Maybe you could say that, even that, not the cleanest, so maybe we need to take it from this one because it reset itself and down here, but create a huge range. A little bit better in terms of interacting with that 382, but ultimately it's just range, and that's where I'm at. I got excited a couple of days ago because I was hoping that we were forming some form of topping pattern here. But, this has just moved a little bit too far out now for me. So I think there's just too many candles that side. Potentially maybe it comes back up, forms that. I'm sure there'll be some people that maybe even want to try and turn it into a head and shoulders. We'll just have to wait and see. But from a macro point of view, I'm not really looking at any particular movement outside of I want to see if it can finally break above 24,000. And then, you go back into high block on the lower time frames. I won't bother doing it, but it takes out that sort of just under 24,000, 23,800, and it doesn't really have a reason to stay around 24k. So we even need to make its move up to 25,000 and really test those summer highs, or it's just going to turn around. So, I said a couple of weeks ago, I'm waiting for 25k. If it breaks and holds above that, I'm going to go fully back in. That's still the case, leaving that bit on the side in case we do get up there. But likewise, comfortable with the positions where I'm at. So that's what I'm looking at. And then, that's a horrible line. Similarly, just down there, it's bounced off that one quite nicely. I mean, if it is ranging, I do see that movement up, probably to around about 23,800. Kind of the same. Except it's sort of sloping a little bit better on Ethereum. So we've still not, we're getting closer actually, but we've not closed above the November highs. I know it's supposed to be macro, whereas in Bitcoin we've been talking about summer. Actually with Ethereum, we're still battling FTX. So getting back into those smaller time frames. Done so long we're not making that mistake. Tell them can I rush in it here now? It could just be a case of it's calling and catching its breath before that move back up. I'm just kind of waiting on all of this just to see where we're at the top of this range. We're fighting the level from FTX. There's no point going in now because we're right at that level. I might as well wait and see how it bounces off it. Historically, it's bounced from around about 1,700. So, bearing in mind we're at 1,665. The risk reward just doesn't seem right to move in right now. Dot's had a great run. We were slagging Dot off hard, even without any effects, but it's turned its way around. I saw Bijan put a news article in there making some good partnerships or taking on its ecosystem with car manufacturers and everything else, but it just generally seems to have had a very positive and again for me in terms of structure, whereas Bitcoin and to a lesser extent Ethereum was flat, this one's giving me what I want to see with just higher lows followed by higher highs. So for me, there's no reason that we can't be retesting 740 and looking where that's going. And then, that's probably tying in with FTX battle then and whether or not it's going to run out of steam. So that's kind of where I'm looking at with dots. A lot of the other ones are fairly similar. Dixie's had a decent bounce from its fall. Kind of finally caught some support off 101. Yes, it did just slightly gap down below it, but it recovered that one pretty well. So really, I'm saying it stopped at 101. But, the work's to be done now. I'd like to see it break the 105, and then we can kind of see whether or not it's reversing from there. Total market cap back over 1 trillion, which is good to see. I suppose it depends who you are, but yeah, for the market, it's good to see. Now, you said GRT. So we did talk about AI in general, but all of them have pumped, and it's kind of hard to find any real TA behind why they've pumped. This is hype-driven fundamentals of AI is a big thing at the moment. Graph's been around for a while. It's got a good reputation anyway. It's the market leader within the sector, of which the sector is quite small. And so when people are looking to get into AI projects, they're going to go in and go, oh, where are the top ones? Well, I'm going to jump in on these, and lo and behold, these are the ones that have moved the most. 146%, 900%, and 250%. You're hard pushed to find any that beat that down there. I mean, you've got some small ones down here actually. So, but of the top market cap ones, they're the ones that move the most because that's what people are moving the money into. I would say if you haven't got into it yet, as I said earlier, just be very careful with how you're going to position yourself getting in. Really getting down onto the lower time frames if you have to have a look at pullbacks, see what it's doing on things like EMAs and whether or not it's bouncing off those, because I do see a correction. I'm not saying that the hype phase is necessarily over, but it's gonna correct. Or what I'd certainly like to see is it going sideways for half a day just to sort of build a bit of support. At the moment, this has just been up since midnight. It's had 22 candles nearly of just permanent green. Feels like that needs to pull back a bit to be a bit more comfortable there. So in terms of the project, I think it's a good project. It's been around a while. It's got this reputation, and it's certainly carrying the right narrative at the moment. So yeah. I think that's kind of it, guys. I'm trying to trim these down a little bit. So we've done 1 hour 40. I don't know if there's any questions that are in there. Richard, thank you for your feedback. What I'm going to do is I'm going to immediately jump off this and have a look at the stream and see what the quality is like, and then I will run a dummy run between now and next week to see if changing the latency works with balancing out. I don't think of much else I can really do on that, and then but the software glitch might actually fix. Let's just go back. Don't even see the charts anymore. But the software fix from Zoom might actually fix what I was wanting it to do. Let's just get rid of that. I'm just trying to find how complicated it is. Jamie's put, thanks, Harry. Oops. Why is this not changing? Sorry, guys. There we go. Right, didn't need the screen anymore. Jamie's put, thanks, as Tim said, really helped understanding the high block. Yep, no problem with that there. If I can get it back onto Zoom, I will do. If that works better for other people, then we'll move to that. As I said, I personally prefer YouTube. I think it has better functionality, and the flickering of my camera is really annoying. It really does frustrate me. So it's quite difficult to have to do that and have to wear my headphones and just get hot after it, or it's just but if I can try and sort out the quality of the stream, then we'll go from there. Other than that, thanks everyone. I'll post everything in there, just sort of summary. I don't think there's much to say on the news, but if you get a spare bit of time and you're interested in this, I'd definitely recommend having a look at Crypto Saving Expert as just a starting off block for potentially some research you're going to do. We will cover Near Protocol next week, so if anyone wants to swap up on that one, feel free to. And hopefully, we'll have our call the day before CPI, so we may end up having to talk about what that's going to speculate on. But thanks for everyone for tuning in, and I hope you enjoy the rest of your evening. Cheers now, and see you all later.